Good morning. Welcome to YX Insights. Today is Friday, January the 23rd, or pre-market open. We've just seen a pretty volatile 3-day week so far that was centered around Greenland tariffs as well as the Japanese bond yields. A quick recap. President Trump wants to take over Greenland, and he threatened to put 10% tariffs on the European countries that are against the proposal, including Denmark, UK, France, Germany, etc. But during Davos, in his speech, he retreated from the tariff threat and said he's not going to utilize that, but instead will come to an agreement somehow. Then secondly, this coincided with Japanese bond yields spiking higher because the Japanese Prime Minister wants to do tax cuts on the food items ahead of the next election. So if we look at the 30-year bond yields, we saw a big spike on Tuesday. So that's a 30 basis point spike for the very long end 30-year yield. So it's a massive deal, breaking out of this previous range that was showing higher highs and high lows. And this in itself is a problem, not just for the Japan's onshore pension funds who hold the long end bonds for its investment portfolios. So you can see the portfolio values tanking massively because of the high yields, but also the cost of carry trades that historically have used Japanese yen as cheap funding because of a low interest rate in Japan versus the high yield you can get in US and also the returns from the risk assets. So the combination of the tariff threats and the yield spike propelled a big drawdown early in the week. But since then, the Japanese Prime Minister has also promised not to increase the government budget through the tax cuts. So that has harmed the market a little bit, but also the big banks have also stepped in to buy the long-end bonds to stabilize the market. I think in the soon future, Japan's central bank, the BOJ, will also step in with quantitative easing measures. So yield curve control, whatever you call it, because this is pretty essential to the financial market stability. We also had a rising Treasury general account balance into the end of last week and beginning of this week. As you can see, the TGA was below 800 billion at the beginning of last week, but now it's climbed all the way to 900 billion at the beginning of this week. And on the margin, the weaknesses don't get the support that otherwise it would get if TGA was going down. However, the good thing is that if you look at the SOFR versus the FFR spread, which measures the interbank lending market health, there isn't a sign of stress. It's actually now at a slight discount, negative 1 basis point, but it's been hovering around zero for the past week. So the interbank lending market is in a healthy, orderly state. There is no stress, as you saw around the year end or the month end in November and October. So overall, as I would still expect TGA to come down in the near future. I think this is more of a timing issue in terms of bill issuances and receipts of the government revenue. But when it starts coming down, it will provide additional liquidity support to the market. And we have seen the S&P 500 now bouncing back quite strongly from the Tuesday turmoil. So looking at the chart now, we found a local low on Tuesday, and we are filling this gap that was created before the Tuesday open. However, we're not quite at the all-time high again just yet. I still lean cautiously bullish because first we're back towards above the 50-day moving average. We're seeing high highs and high lows in this price channel. So nothing has fundamentally shifted my bullish view for moving towards this wave three target around 725. There has also been a quite big volume profile here that has acted as a support, especially on Tuesday, which found the bounce. So this does suggest to me as accumulation coming out of this wobble in November. So on the margin, I do think we are moving higher. Unfortunately, we might not get to this 725 mark directly before mid-February, and we know that from mid-February onwards, seasonally, it is a weak period going into mid-Feb to mid-March. So in the near term, I am more optimistic that we will reach 700, which is a new all-time high, but we could see a little retest and retrace in February, late February, instead of going directly higher. QQQ, Nasdaq is a slightly different picture. We actually never quite broke above the October high. So actually, October the 29th was the last time we saw a high, and it has been almost 3 months now. And we've seen the mega cap tech, a few of the Max 7s rolling over, including Apple, Microsoft, Meta, and they haven't really supported the indices moving higher in the past 3 months. And there has been a lot of rotation out of the mega caps into the growth names as well in the smaller cap region, as we'll see in a second. So it does look pretty range bound for the moment. Incrementally, I still lean towards a more bullish outlook, which aligns with SPY. And I think in this wave three, we can definitely challenge 670 or the above, but it's just taking time to accumulate and develop this base. Because the Max 7 was the hot trade back in the back in the summer of 2025, and now money is just rotating out and looking for better opportunities in the meantime. And we're seeing a better breadth in the market as well in terms of having more names being above the 50-day moving average than before. So all of that supports a rotation thesis, not a bearish thesis in the near term. So I think incrementally we will get QQQ breaking out of this zone sooner or later, but the upside may not be as aggressive as something like the IWM, which we'll see now. IWM, this is a pretty clean chart. We had a wave three and wave four retrace, and then the wave one, two, very classic, fairly shallow wave two retrace towards the year end. And now we're breaking out of this trend line, and we're seeing consecutive rises throughout this month. So that is pretty bullish. So if we have a very bullish first 3 weeks of January, it sets up quite well for the rest of the year. Now, in the near term, of course, we're going to get some sort of retrace at some point, just a pullback to digest this pretty rapid move. But I do think the wave three target certainly has room to reach 290 or even 300. So in this broad region here, before a larger, meaningful pullback in wave four. And I do suspect wave four will be much deeper than this wave two would be. So among the SPY, QQQ, IWM this year, my favorite is IWM. I think the market hasn't really priced in aggressive Fed cuts. If we get a weekly labor market, if CPI starts to come more in line with oil prices coming down, we could see more cut expectations, as well as the new Fed chair. And also the longer end yields coming down as well if the GDP can outgrow the debt growth. So together, that should help the smaller cap, the high duration, high beta names in the equities world. So looking at the 30-year yield, just before we look at the TLT, we've had ABC move up, and this wave C is now at has topped at the 123 extension of this wave A. So this is a very classic terminal target zone for this wave C, and this potentially is a top reversal zone now, and we could be looking at wave 3. But we still need a bit more confirmation in terms of this breaking below the 200-day and 50-day moving average. So I'll just be a little bit more patient on this one because the uptrend hasn't been broken. It's just that in terms of the extended target range, we did meet our target for wave C. So I think the biggest moves is behind us. Looking at TLT, so we saw a local bottom potentially at the 200-day moving average, and it's now reversed quite nicely towards this trend line resistance. There is a big volume shelf over here around 87 to 89. So really, to confirm the rally, we need TLT breaking above this 50-day moving average in the resistance band as a minimum, but ideally climb above 89 to escape from this overhead supply. Again, the catalyst will be oil prices moving lower, potentially a weaker non-farm payrolls, especially given the recent weather, and a dovish Fed chair being appointed who will take over from May onwards. So the oil prices have been quite tricky to analyze in the near term because we saw a big spike from the Venezuela situation and the Iran situation, and we could, and there is quite a bit of volume now building around here. However, this could be an expanded wave 4 flat, and that overlaps with this wave 1, and that's quite typical in commodities world. So that would be called an ending diagonal for this wave C. So in the near term, I still favor the market to move lower towards this wave 5 target, towards the low 60s. For oil, I think the fundamentals align well with this expectation, given the excess supply and production capacity, both in OPEC as well as the North American nations. Bitcoin, so Bitcoin has suffered a couple of setbacks, first from the delay of the Clarity Act, as well as the broader market sell-off from the tariff threats. But what I can see overall is that having broken out of this trend line, we're seeing higher lows and a trend line forming at the bottom region. And this volume here suggests accumulation because we haven't broken down from here. So when it breaks out, this will act as fresh support. I do fancy it testing the 105 to 109 region next in the wave 3. I think there could be potentially a lot of resistance here because of the 200-day moving average as well as the volume profile here. But I do think this will be the beginning of a recovery for the bull run rather than a bull trap that would end up with a lower low. So I am cautiously bullish in the near term. Something I want to show you for Bitcoin versus the copper gold. So previously we've had, or even today, we have the 4-year cycle that is almost like clockwork. But if you really look at the ISM as well as the copper gold ratio, they coincide with the copper gold ratio peaks, the local peaks in December 2013, December 2017 again, and then October 2021. And this is more of a business cycle phenomenon when copper outperforms gold. And Bitcoin also peaked around those areas. However, this time around, this new 4-year cycle with the speech marks, we haven't really had a new peak in this copper gold ratio. And that suggests to me that we might not have peaked in Bitcoin's absolute price yet. So alongside the lack of euphoria when this hit the new all-time highs, and and the lack of the peak from the copper gold and also the ISM, I think this 4-year cycle may actually be extended. So yes, we are seeing a correction, which actually isn't that big in comparison to what we saw in the previous cycles. But actually, there could be much higher room to run from where we are now. So again, this is another piece of evidence, this whole probabilistic assessment, that I think we are seeing higher highs this year, and potentially a new peak in copper gold. This year as well. Also looking at ETH. So ETH has consolidated around this price level since forever. But what we observe is that we are seeing a higher low here, massively higher low here. That is almost like an inverse head and shoulders. You're not allowed to call this inverse head and shoulders because it's not coming off a falling price trend, but the gist is the same. We are seeing incrementally higher highs, which is like the neckline here, and higher lows over here. And I do think this is a recovery phase for Ether rather than a bear flag that many people think it could be. And we're also seeing volume building up here as well. That suggests accumulation. Another interesting chart I want to show you is this one. So this is the ETH in the light color here, and then Tesla in the orange color here. But Tesla is 250 days ahead. And what we see is that this cycle high coming off into the cycle low here, the similarities are very striking. So this is Tesla going to the US election in late 2024, peaking around December, and then falling down into the March-April low, and then moving higher into the 760 region before Trump and Elon had a fallout, and then we consolidated and moved to a new high. But back here, when I first started turning bullish on Tesla back in April last year, everyone was super bearish, super skeptical, giving up, and they were calling for 100, for example, as target. And actually, people didn't really come around to believe that Tesla was heading to new highs until probably around the 670 mark when we had a breakout here. So it looks like ETH is following a very similar fractal trajectory. There isn't a real rational explanation for the likeliness of those two charts, except that cycles maybe the mass psychology in those high beta cycles could look pretty similar. But if you look at the distance, the time distance, as well as the movements within those cycles, they just look pretty hilariously alike. So it's either just a freaky coincidence or actually those names are programmed in the matrix. And I do think the next attempt higher could really just go really fast towards 4,000 first, and potentially 5,200. That's in the wave 3 here. And in the large degree wave 3, we could see a new high around 5,000. So I'm one of the few bullish analysts left, and people like Tom Lee are getting a lot of heat, but I actually agree with him in terms of his crypto outlook. Solana also is consolidating here, and that does look like an accumulation pattern over here in terms of volume, and we could test the 200-day moving average here. Again, very similar for XRP. We are seeing a lot of traded volume over here. I think that could be a near-term consolidation, but we need to move above the 200-day moving average to really confirm the recovery. I do have a big target for this week 5, which is more than double of where the price is now. But given the price action, if you look at how XRP moved from 50 cent all the way to 3.3 within a couple of months, and then consolidated for over a year, I don't think this price target is that aggressive. But you do need to manage your risk quite carefully and at least put in some stops below this April low. Coinbase. Unfortunately, I was right in being a little bit skeptical on whether this wave 5 had completed, because I had this green box here to show that wave 5 typically would stop at 1.36 extension of this wave 4. And we didn't really quite reach that in December. So now we're seeing a new low. I think it could, again, travel down to 210 or even 200. But I would say the biggest move is behind us in this downside, and this is probably a buying opportunity. And if you look at the RSI, we're seeing higher lows over here, so that is a bullish divergence. And of course, the next resistance band is this volume shelf here around the 250. You had to really take it out with the 50-day moving average, which has acted as resistance. And then after that, we have the 300 and the 200-day moving average band. So we take it one step at a time. It's a very early turnaround story at this moment. Robinhood, given the grand scheme of things, I actually don't think this stock has acted too bearishly in terms of consolidation. We're now likely to meet the 200-day moving average here to just finish this wave 2 pullback. And then we can look at the wave 3 target. Unfortunately, this wave 2 pullback is quite steep. And if we break into a new low, then yeah, we can definitely challenge 93 directly next before the turnaround, which is the lower end of this band. But for now, I lean cautiously bullish for alongside the broader crypto. MSTR strategy is still hugging around the lows, but there's a lot of volume interest here. And I think we should be taking off soon with Bitcoin. It's trading at nearly par in terms of MNAV. So a lot of the reasoning and rationale for the shorts to say that strategy is overvalued, is having a too high a multiple, all of that reason at least is out of the window. So shorts really should be looking to take profit here. And if they want to short crypto, they can short Bitcoin or IBIT directly. But shorting MSTR as a crypto proxy at a nearly par MNAV doesn't seem too wise for me. So I think one of this big risk factor is now probably off the table. And the next move up is likely higher. BMNR, we managed to get back above this trend line here. And people are getting very, very bearish for ETH and Bitcoin generally. So when I post on social media, I get a lot of very bearish comments. And that does, again, remind me of where Tesla was back in April last year. I think we're seeing higher highs still, and we're seeing rising momentum here. So all of that is supportive of a recovery story. But of course, really, you can't confirm the recovery turnaround until we break above this VWAP from the October high. So that's what I'm looking for right now. SharpLink, relative strength has been better than Bitcoin. And I do think this is an accumulation story here with institutions buying up shares. So the first resistance will be this VWAP from the October around 12. And then after that, we have the 15 to 16 mark around the 200-day moving average and this volume profile here. I do think this low will likely hold, and that has served as a supportive zone from June onwards. But it just needs a bit more patience from the investors, um, as the bottoming phase can get quite choppy. Gold here is pretty striking. We are pushing higher towards our wave 5 target zone here. So we almost reached 450. It does look pretty extended with the RSI now at 78. So that is a pretty high level. I wouldn't chase the trade here. And I think it could be wise to take some profit off the table. One thing that's interesting about gold silver ratio before I get onto silver is that if we look at this ratio here, so while gold is pretty big, silver has completely outperformed, and this gold silver ratio collapsed to a multi-year low. So the last time we got to this 50 level was in 2011. And if we look at this as an ABC correction downwards, this is now entering the 100% extension on this wave A from the wave B high. So it does begin to look a bit more stretched, meaning silver is pretty expensive relative to gold. So again, that is something to be cautious about. And the RSI is at 16. It could snap back from here. If you just look back in terms of historical levels, this 50 is a pretty clear reversal zone. I mean, we temporarily traded below that in December 2010, but that was more of an exception than the rule, going back all the way until probably 1985. So yeah, so in terms of relative value, I'm just a bit cautious on silver. And just looking at silver, this is a very clear parabolic run. We had 150 5% rise back in 2020, which was seen as aggressive. But if you look at where we are now from the lows of 2022, we are up 400% in just 3 or 4 years. So I would be surprised if we don't get a big retrace after this sharp rise. Personally, this is I would be quite ready to take some profit rather than chasing the trade. At least I wouldn't try to enter here. And if we get a pullback, I know this wave 4 does look quite extreme, but even at the shallow end of the wave 4 pullback, the 23% retrace of this wave 3 gets us to 60, which is still quite steep. So I would just be ready for that. Then just covering the miners quickly as well. So gold miners rose with gold and is out of this band. So it's getting quite extended into this wave 5 push at 106. Again, this is a region I would more consider taking profit rather than chasing. Also, silver miners looking very big, pushing pretty high for this wave 5. And if we look at wave 5 potentially as the extension of this wave 1 here, it's now approaching the 1.618 extension of this wave 1. So altogether, very overbought in terms of momentum. I would just be very alert to a near-term top forming here. I mean, I really don't think we need to catch every cent of the last dollar of every trade. I think at some point having a trading stop and think about protecting the gains is quite important. And therefore, if when my model signals turn risk off, I would really respect it, even if the market can still push higher for a couple of more days. Palladium back to the highs again. potentially this is a wave 4 correction all done, which will be a quite shallow one. And there could be a wave 5 push higher. And if you're just judging by the extension of this wave 5, there is room for 200 to meet this target. So it does look like we could push a bit higher here for palladium. Platinum, PPLT, we are in the extended wave 5, but looking at the subwaves, this wave 5 of 5 still has a bit more room to get to 250 or even 280. So we're definitely in the final innings of this climb. Again, just stay alert of the potential topping here. Copper reached the 120% extension of this wave 1. There is still room for wave 3 higher towards 40 before it retraces in this wave 4. Like I showed earlier, in terms of the copper gold ratio, gold has massively outperformed copper in this cycle. But there is a cyclical effect where copper will again gain back the momentum against gold and start outperforming gold as well, which is typically the peak of the business cycle. And all of that then tied back into where Bitcoin could trade. So I remain a bit more bullish for copper in the cycle than gold. I think there is more room for copper to run. So for copper to move higher and then simultaneously for gold to move lower, then the copper gold ratio could rise again. Uranium, we are now near the highs of wave 3. So there is still room for a wave 5 extension towards 66 to even 80 here. It could get quite extended in terms of where wave 5 could trade, as we've seen. So near term, there is still a lot of momentum for the upside. BSI is trading at the 200% extension of this wave 1. The next target will be 21.8. We could find a wave 4 retrace next after we hit this band. Again, if you look at the shape of this, is really taking off into a parabolic shape, which matches the previous high. And if you are a classical analyst, you would recognize that this is essentially a cup formation with a handle retrace, which in any wave is called wave 4. But in classical terms, it's called a cup and handle before we get another leg higher in wave 5 like this. Now, looking at Apple is actually a pretty bearish chart. We broke the neckline of the head and shoulder before. So I start warning our subscribers that Apple has entered a bearish trend. Just be very careful and sell the rally. Now we are looking at the 176% extension of this wave 1 for this downside wave 3. We could begin to find a bounce for this wave 4 before completing wave 5. So typically when Apple is really oversold on the RSI, the 1 month forward returns tend to be positive. So we could find this wave 4 after earnings going to February. And then with the seasonality weakness, we can get wave 5 lower to complete this entire drawdown. Amazon has been a frustrating mega cap stock for the long-term holders who have just really complained about the price not leaving this February 2025 high. And the reality is other mega caps have rolled over, like Apple, like Meta, and like Microsoft. So in terms of relative strength, Amazon actually hasn't been that bad. This consolidation is seeing higher highs and higher lows here. And this is more of an accumulation volume here that supports a big upside towards the 300. So right now, we just need the price action to really return to this local high here, surpass this potential corrective wave C zone, and then to reclaim the high of 260 and then reach the target of wave 3. If it fails to do that and starts traveling to the downside, then that's a different story. But for now, I'm reading it moving higher in the near term. Google had a very shallow wave 4 pullback over here, didn't even touch the 50-day moving average. So it has been the leader of the Max 7 over the past year. And now it looks like it could just push for one more high in this wave 5 towards 350 to 370. There's a lot of late bias, but the thing you have to watch out is that since we move to past the September high, the RSI levels have been moving lower. So this is a bearish divergence. It doesn't mean Google is going to roll over tomorrow, but it does mean that it probably is wise to start thinking about taking profits when we make new highs, and just be aware that this could snap back in terms of top information. And if you look at, I'm just going to jump to Microsoft first, because back in April to July, we saw Microsoft building an incredibly beautiful, smooth curve up. Every day was within 1% of movement up or down. It is a clear footprint of institutional big money buying. And then what happened? It had a high after the July earnings date. It went back and it tried another high, and that became a double top. And then it just moved all the way down now back to 450. So a lot of people got trapped over here thinking it could move higher. And I certainly thought we had one more high to go, but it didn't materialize. Now we're in a very clear downtrend, especially after breaking the 200-day moving average. Now there's very thin volume over here as well. The good news is that after those 5 waves, we are now looking at a potential completion of the wave 5 at a 200% inverse extension of this wave 4. And we've traded at below 30 on the RSI. So Microsoft, the 1 month forward and 3 month forward returns after RSI hits below 30 in the past 8 years has been pretty good. The hit rates have been pretty high for forward returns, especially in the past 5 years. So I do think we could potentially start getting a retrace, and that could be a wave ABC retrace here into this region, into the 500. But I would still expect a bounce, even if that doesn't mean the long-term bull trend. Meta found a big bounce yesterday, on Thursday, after reversing from the 70-80% retrace of this wave 4. So this could be a wave 1 to set up. So throughout this week in my research notes, I said that if this is one to set up for the bullish side, the price has to reverse now because it's already at the lower end of this wave 2 target, and it has done so. They're bringing ads to Threads and they're cutting jobs in San Francisco and all that, which is the usual business stuff. But the point is that we have seen a concrete reversal at this point, so that keeps the bullish option alive. Otherwise, alive. So the real hurdle now is really trying to get past this resistance trend line here to which is the 200-day moving average as well, to really confirm that actually this downside move is already finished before the 5th wave, and actually this is just an ABC correction, and we are looking for a new bullish run next. So still a lot of work to do to prove itself, but it's keeping the bullish option alive for now. NVDA, I'm getting quite split-minded because this does look like ABC move up, but if you recall the Amazon chart, it does look very much similar in terms of the accumulation pattern. We're seeing price moving quite range-bound, having one high, a higher high, and then a lower low here, with heavy volume in between. So, of course, there is still a chance for this lower low for the wave 4 around the 200-day moving average. So this is just a corrective move. But on the margin, I do lean towards a new high here for wave 5 next with SPY and QQQ as well. So it does need to prove itself by moving past the 190 mark to invalidate this wave C expectation, and then suggest that we're actually in the wave 1-2 setup instead. So just watch for a few more sessions and see if we can take out this new high before we make a decisive judgment on whether the next bull run has begun. Tesla is also consolidating around this 400 to 450 region with heavy volume building. And you can see that it's around the 50-day moving average, is also around the highs of this rally here. The thing is, we're heading towards earnings, and the options market is suggesting a lot of put buying in terms of the downside protection. So investors are quite cautious going into this earnings, as you can see through the price action alone as well. And incrementally, that could build up for one more pop towards this wave 5 afterwards. Because the last thing you want going into the earnings, especially given the Q4 deliveries and productions being behind consensus back then, is you don't really want to see a big rally going to the earnings and then we get sell the news. But actually having a sell-off heading towards earnings and the investor buying loads of puts, expecting extreme downside reaction, or trying to protect themselves against it, is probably a good thing for the earnings play. And we are seeing quite positive reversal over here in terms of 4.5% on rising volume as well. So that keeps me cautiously optimistic about Tesla still. Palantir, what I worry about Palantir is this price action of potential head and shoulders and therefore completing wave 5. This does look a little bit like the NVDA chart, but the key difference is that it's lost the support from the 50-day and this volume profile here, and it's now directly testing the 200-day moving average. And if it falls through this support zone here with volume profile, where I think 130 is a very realistic goal in this pullback to complete the wave ABC pattern. So I'm quite neutral on Palantir in the short term. AppLovin, a lot of negative report coming out about potential the initial early shareholders laundering money through the business. The thing with this type of claim is that it could be true, but the legal process and the judicial process does take a long time to play out. And in the short term, it could still rally towards our wave 5 target. So just because there is a piece of negative news, it could take months, if not years, for the SEC to untangle and validate whether there's claim, whether there's sufficient evidence against this. And I guess the big question is, if the revenue was artificially boosted, are we going to see them go away in the coming reports, which again will be a big tell sign. So I am leaning a bit more neutral now after this, but my point is that you can't rule out new highs just based on short selling reports, and that could take a long time to investigate. Oracle, finally, we did get that one more low here. It's a bit like Coinbase in terms of this wave 5 expectation. This one in December was a bit too short of the target, and now we are basically at the target around 170, which is the lower end of this wave 5 expectation. So now I think the majority of this sell-off is pretty much complete. Of course, we can grind lower to 160, but I would lean towards a reversal play in the near future. As you can see from the RSI here, we're seeing higher lows. So this is a bullish divergence, lower price versus high momentum. So we could be seeing a reversal signal soon. But it's better to confirm the recovery by waiting for the price to move above this volume shelf and testing the 200-day moving average again. CrowdStrike, I like the business fundamentally. I think the valuation isn't too aggressive. We are into a wave 2 retrace, and this is pretty much inside our target zone still. I think as long as we hold this September low, I'm not too concerned about the overall direction. I think we're still in the large uptrend, and there is a lot of volume here. I don't think this is distribution yet, and I still favor the stock to move towards 700 this year. Cloudflare is a completely different story, though, because you saw a similar pattern in Palantir, but Cloudflare did actually break below this neckline support band, and it's quite definitively moving towards this wave C target around 150. So I will really get out the way. And I do think this is a pretty textbook Elliott wave cycle. We have 1, 2, 3, 4, 5 waves rally from 86 to almost tripling to 260. And now we're seeing a ABC pullback. And I think that could set up a wider 1-2 setup. So 130 could be a quite good opportunity at a 50% discount to this high. SOXX, semiconductor ETF, is seeing a lot of short selling building up in the SOXX ETF, but he still managed to make a new high. So it's very strong in terms of momentum. And this is what I said earlier in the week. If SOXX is moving higher, staying very big, it's unlikely the broader market capitulates into a big crash or big sell-off. So this is almost like the canary in the mine. As long as this is holding firm, I think the broader market it will still hold up pretty well, even if we get some rotation. And the thing is, this wave 5 target is a classic expectation based on this wave 4, but really we could have a sub-wave 1, 2, 3, 4, 5 here, getting all the way to 420, which will line up well with our SPY and QQQ expectations this year. So I don't want to get too far ahead of ourselves, because even if we get here, it's either wave 3 target or this wave 5 target, we will still see a pullback. The difference is that depending on the shape of this pullback, whether it's corrective or impulsive, we can then derive whether we get a new high or not. Broadcom, again, very similar pattern, with this being potential head and shoulders. I did fancy seeing a bigger wave B pullback, but it's not necessary. The key really is for Broadcom to hold this price supportive band here. Falling below this, we can see it deteriorate rapidly into this wave C. And the thing is, this wave C could be worse than what I put here, because if we didn't get this higher high in this wave B, then wave C from this high could go all the way to 260 at the 123% extension of this wave A. Of course, we don't want to see that happen, so we want to see this band to hold and at least make one more high in this wave B here. But overall, I'm quite cautious. So if you were to try to trade this upside, I would definitely have a stop at this high here, 315, for the right risk reward. But otherwise, it's better to just watch and see how the chart plays out instead. ASML, definitely pushing towards the high end of my wave 5 target. Is not the time to short, but also not the time to chase and for a new entry. For us, we just have to watch how this plays out in terms of the topping pattern and the next pullback. On holding, we saw a very big bounce, almost like Meta, after reaching this wave 2 zone. So that is a early supportive sign for a potential recovery here. I think getting past this 50-day moving average and we could potentially get resistance here in terms of this volume profile in the 200-day moving average, and then we can get a pullback in this wave to retest this volume shelf here. And if we can stand it, then of course that's an ideal entry for the bullish setup. Finally, AMD. AMD has defined my expectation of this potential gap fill, although it hasn't reclaimed the new high, so there's still a chance this is a wave B pullback. We just need to watch just a little bit more to see if we can get past this new high, and then that puts us firmly en route for this wave 3. So that's it for this week. Thank you for joining me, and see you next week.